Hello everyone and welcome to my morning report analysis videos on Thursday 28th of June with me, Richard Parry, market analyst at Hantec Markets. We've had a big turnaround or big shift in market sentiment yesterday. We had news that Donald Trump was not going to be focusing in terms of his trade restrictions or restrictions on foreign investment. They weren't going to be focusing on specifically China. They were going to take it as more of a regulation angle and across the board. So that was seen as a bit of a softening of the attitude of the US towards China. Although we did see a very strong move, positive dollar-wise. We saw a big strong move to the upside on the dollar. That was seemingly sustained, but that has come despite the fact that Treasury yields fell sharply and remained subdued below 285 on the 10-year. And it is interesting that this move has taken place. Now we've got on the forex majors, we've had euro dollar fell sharply, cable fell really sharply below 31 big figure. I'll talk about that and the implications on the charts in a bit, but really strong move, and the euro support remains 15 big figure on euro, so watch out for that. But also we saw a rebound on the equity markets, but that rebound that we saw on the equity markets in the European session yesterday was lost into the close yesterday. I mean, maybe as traders sort of started to consider, well, is that actually a softening of stance at all? And then Larry Kudlow came out and said, well, it isn't the US softening a stance on China, and subsequently equity markets fell, bond markets fell. But that fall in equity markets is not really translated through today. It's sort of translated through as more uncertainty, really. Asian equity markets basically traded mixed. We had the Nikkei, which was all but flat on the day. We have, well, as we speak, FTSE and DAX are basically flat on the day. You had a rebound in S&P 500 futures, which has helped to sort of stabilise markets, I suppose, and not seen that sell-off on states sort of translate through. But yeah, it's been a mixed morning, really, and it's only really the weakness on sterling that has been sort of played out through the forex markets. You've got the New Zealand dollar, which is also to an extent under pressure, following on from pretty dovish outlook from the Reserve Bank of New Zealand. But much beyond that, not really a great deal of direction. Gold remains under pressure though, doesn't it? Yeah, really strong move. Sort of still in process on gold, but yeah, it's an interesting sort of turnaround and improvement in the dollar. But my question would be, is it a sustainable move, really? That takes me to the data today, and we've got GDP for the States. GDP for the US, final look at Q1 GDP is expected to be as is at 2.2%. Where is it? It's not through, not there. Sorry. So it's expected to be as is at the last reading, which was 2.2% of the prelim reading, and that's the softening. Jobless claims 220,000, again around the same levels that we've seen previously. So not a massive amount of data surprises expected today. So that takes me to. Oh, sorry. You've also got the EU summit, which is on. Being held today. That's focusing more on migration rather than Brexit. So the migration issue in Europe obviously is very politically pretty toxic, and there's can the politicians actually come up with a solution? Doesn't look likely at the moment. So my chart today is sterling Aussie. Now sterling has been under pressure. Certainly with that breakdown on cable below 131 figure. Now the outlook on sterling Aussie has been improving throughout June in this uptrend, and that uptrend has been still intact, and we got a test of that uptrend that held yesterday. We're getting another test today. So far is holding. Ultimately, I mean, you'd look at this action on the market in the past sort of week and a half and say, well, that is a slight bearish drift on the candles. Certainly the negative number of candles are growing, but I think that it'd be sort of rather more of a consolidation, really, and you can see that the move has sort of started to pull the stochastics lower. Now stochastics are on the brink of a sort of crossover sell signal confirmation. But you look on the hourly chart and you think, well, this is basically just a consolidation range, really. And you've got this sort of floor of this consolidation, 77.50. Last few days we've been finding support around 77.80. But that is basically around this breakout level, 77.35 I think it was. Yeah, 77.35 was the breakout. So you've got this sort of band of support, 77.35 to 77.80, which is holding now. Even if you broke that little uptrend on sterling Aussie, I'm not entirely convinced that would suggest, oh my goodness, we're going sort of sharply lower. I think at the moment this is just consolidation, but if it can hold above the breakout level, we're still, I think, in this recovery mode. Now, interestingly, resistance overhead, 180 big figure, hit twice. December and February hit to the pip and then fell away, and basically we're sort of pretty much finding a ceiling underneath that now. So you've got this band, trading band between sort of 77.35 to 78 big figure, sorry, to 80 big figure. So a breakout of that, I think, is going to determine the next direction. Now, clearly we've got the market is just drifting a little bit at the moment, but if support can hold and also that uptrend, then it'll be interesting to see if the market can sort of start to break higher. But this hourly chart is consolidating still. Now, the hourly RSI moving below 30 would be an indicator, so watch out for that if that were to happen. That would start to really put pressure, I think, on the supports. So for now we're holding this range, but we could be on the brink of a key move. So I wish you good luck in your trading today on Sterling Aussie, and I wish we'll speak to you later.